Good
them over.
morning, good morning, good morning. Welcome to today's Morning Blast with myself, Ryan, and of course, Michael, your very, very, very candid market-related podcast where we pull no punches and take no prisoners. As usual, nothing discussed on the podcast is trading or investment advice. Hopefully, we put a smile on your face, add a bit of value into the day ahead. Yeah, labeled as explicit for a reason. We have filthy mouths. Nothing. There's no editing that goes involved in this. So if you're listening to it live, you get the same as if you listen to it on the podcast when it goes out onto the channels, etc., etc. Michael, how are you?
Well, very good morning to you, Ryan. Good morning, everyone. I know you won't believe this. I was actually just looking up the values of the company as I joined the call. So apologies if anyone overheard anything there. But I'm not too bad at all, mate.
Values of what company?
Well, my company.
Oh, your company. Oh, okay.
It's not just some other random outfit down
I
the
thought you
street
meant
somewhere.
the value of my company, as in like just me in general being around you.
Well, I'm not sure I'd go that far.
What is it? It's day 47 of Operation Epic Fury.
And it's day 9 of a ceasefire.
And day, with 5 to go, is it?
Yes, although potentially another fortnight, although we'll go on to that in a bit.
Yes, exactly that. But before we do, let's crack on with some levels to watch in markets and what markets been doing over the last 24 hours. Well, dear friend Clive's Allbirds. S&P made new all-time highs yesterday, woo, as did the Nasdaq. Futures overnight in S&P, it was 96 and 50 cents. In the June contract, above here, we've got 71.96, 72.93 and 77.33 are Fibonacci-based targets above. European bourses also bid, but still a while away from their all-time highs. DAX stayed above 24,150 yesterday, which is bullish. Euro Stoxx 50 capped at 59.34 for now. Saw some red yesterday, but it's bid overnight. Ditto the FTSE. Obviously, we had the US rally. Most of the US rally kind of seemed to take place after the European markets closed. That's why you see the discrepancy there. Bond markets don't seem so convinced that this is all done, and the trading mixed. Confused for now. T-notes capped at 111.21. In FX markets, the recent dollar weakness took a pause yesterday. Bitcoin closed above that 74,500 level. Which
I need to have a bit of a moan at Clive with that one.
Why?
You can't be putting Bitcoin in as FX.
We take it up with the man himself.
I'm sorry, Clive. You've let yourself down there.
He's let himself down. What's he going to be putting in next? Fart coin or something like that? What are we? So bull's cheering a little bit in Bitcoin. Obviously, we keep saying the 74,500 level. When we get away from this, I'll be very happy, but just not yet. Gold, the yellow metal, saw some red yesterday, but it's higher in overnight trade, so we're sticking with the bulls there. Silver, now iron resistance at 82.14 and 83.07. LME copper posted a doji yesterday, but nothing trend changing. Zinc moved through resistance at 3,364, which should encourage the bulls further. In aluminium, still pointed higher after ignoring Tuesday's Harami candle, eyeing resistance levels from 2022 at 37.42 and then 40.73 and 50 cents, the latter being the all-time high. In the energy space, Brent crude posted a doji yesterday, but it's still north of the Fibonacci support of 91.66. Gas oil, so European diesel markets rallied away from a Fibonacci support at 1,102.5, so that's 50 cents. TTF, European gas benchmark, saw red again yesterday, down to 41.20, then 40.85 this morning, where we found some early buyers. European carbon markets found sellers at 75.50 yesterday, so still struggling to properly see off the 74 level that we've been flagging for a little while of late. Corn, US corn over in the States, had a good day yesterday, getting up to 452. 447 is now Marabou's support. Meanwhile, wheat and soybeans were bid as well, but with less enthusiasm. Thank you very much, Clive's Lamberts.
Very good. Thank you, Ryan. Thank you, Clive. Where should we start this?
Well, I was going to say there's quite a lot to discuss, isn't there? Because, we've got this. Well, firstly, we've got ceasefire expiring in 5 days. We've got markets at record highs. We've got pushbacks we love a good pushback story from central banks in Europe and the BOE, etc.
And the growth data out of the UK this morning, which we do need to get our teeth into.
Let's start there because that's puzzled me.
Yeah, well, actually, firstly, let's just say the market is at a record high, and it's not just on Wall Street that we see record highs. The S&P obviously closing above 7,000 for the first time yesterday. The Nasdaq hitting a new record high as well. But we've also seen, really a risk-on trade coming through in Asia as well. Taiwan is now trading at a record high. I call that out because the Taiwanese stock market is now bigger in terms of total market cap than the London Stock Exchange. So another nail in that particular coffin. And we also see the Nikkei over in Japan trading at record highs as well. So very, very much positivity coming through in terms of sentiment over the last day or so. We'll go on to why in a second. But yeah, we may as well start with that GDP report because it was surprisingly strong. The UK economy growing by 0.5% on a month-on-month basis in February, well above the 0.1% consensus, and actually the fastest monthly pace of growth since December of 2024. And obviously, given that, we also saw a significant boost to the rolling 3-month pace of economic growth, which also came in at 0.5%, which is the fastest pace since April of 2025. Now, of course, this is February data, so it's before any impact of higher energy prices. It's before the impact of the conflict in the Middle East makes itself known. But that has not stopped our esteemed Chancellor from doing a bit of a victory lap this morning. I quote, "These growth figures show that the government has the right plan to build a stronger and more resilient economy." What utter tripe from the Chancellor that is.
Even though this has all come out before, obviously, the war and stuff, I'm still perplexed on how it was such a beat.
Yeah, I mean,
I've not had a chance to drill into the data or anything like that yet, but I'm kind of a bit gobsmacked, to be honest.
Well, yeah, so am I. And I think, when the data came out earlier on, it was one of those prints where you get it and you kind of go, is that right? I need to almost go and check the source, as someone at Bloomie typed it in wrong on the calendar. But no, they didn't. It was actually a broad-based expansion. We saw construction output rising by 1%. We saw decent increases in activity in the services sector. That was up 0.5% on the month.
I saw construction down 2% on the ONS.
Yeah, on a 3-month basis.
Oh, on a 3-month basis, right? Cool.
Yeah, so just in February, we saw a decent rebound. And I think that might actually be, explaining away quite a lot of the upside. Is effectively we had, such a dismal January in many respects that almost just a return to some degree of normality in February artificially inflates the data somewhat.
I'm still shocked that it was so strong, but yeah.
I mean,
but does the government have a hand in this? No, not at all.
No, and also the other thing to bear in mind, of course, and this is kind of stating the obvious, but I'm going to say it anyway, this data's for February. Since then, we've had energy prices go through the roof. That's going to be a big negative demand shock to the economy. Gilt yields have risen, financing costs have risen, et cetera, et cetera, et cetera. So, I think that's why the market reaction to this is, it's one of those where if you'd seen that in a normal time, cables up 0.5%, a big figure on the back of it, because suddenly everyone is reassessing their expectations for the UK economy. But we all know that the data is just so stale at this point, and that the situation has moved on so much in the following 6 or 7 weeks that actually it doesn't really add any value whatsoever.
Yeah, no, I'm with you there.
So that is the UK out of the way. In terms of the Middle East, as Ryan rightly said, we are, day 9 of the ceasefire now. That is due to expire, I believe, on the 22nd of April. Although, obviously, given that the ceasefire is not actually written down anywhere, it does make pinning down a precise expiry date somewhat more difficult. There have been increasing reports over the last kind of 24 hours or so that we could see this ceasefire extended. And actually, I would say that the general vibe of all the reporting that we see is still a relatively positive one. It's still towards some sort of peace deal being struck. It's towards a de-escalation of the situation. We had a number of stories yesterday, a whole host of people, whether it be the Associated Press, whether it be Bloomberg, whether it be Reuters, all saying that it is under consideration that they extend the ceasefire for another 2 weeks to allow talks to take place. And MS Now, who used to be called MSNBC, I don't know why they've rebranded, but they said that talks are likely to return to Pakistan next week, which is also something that President Trump was alluding to as well. So again, when you're looking at the kind of direction of travel, I think one of the things that was a big risk to the market in terms of the optimism that we've seen coming through in recent sessions was this potential that, do you get to the end of the ceasefire and go back to square one and we start firing missiles again? It doesn't look like that's going to be the case. Of course, things could change. It's a very fluid situation still, but I think the market is still very much looking at the path that we're on, which seems to be towards, an end game of some description. And that's helping to underpin sentiment.
I'd tell you something as well that I noted yesterday that's kind of, again, it's all about picking up, air quotes, the vibe, was JD Vance's comments, which, he can be a little bit hawkish sometimes, but he actually came out and said that the US delegation, obviously he led the US delegation in Islamabad, so I said, and he said, I quote, I think the people we're sitting across from wanted to make a deal. I feel very good about where we are. Now, this is kind of at odds with what his initial assumptions were. His initial statements were directly after the talks. So it does sound like, he's been told, this is a positive kind of move and et cetera, et cetera. And that seems to be, follows suit with what we're hearing, these rumors of ceasefire talks extending and stuff. One thing that's worth flagging, and this is a really, really important point, ceasefire does not equal ships transiting the Strait of Hormuz.
No, that is a very good point.
Right. So
especially when it's blockaded.
Well, exactly. At the moment, for all intents and purposes, there are still no ships really transiting at any great volume. There's still a ton of energy that's kind of locked in. The longer it's locked in for, the longer it takes to ramp back up to full production. And again, time kills deals. So, the quicker this is all resolved, the better. But even this ceasefire isn't lowering energy costs. So
no,
one thing to be aware of there.
And there is, there's plenty of people out there going to take, on either side of this. There is a disconnect, so I think it's valid to say is there is a disconnect between what we see in the energy market, where clearly supply is continuing to tighten. Clearly, flows through Hormuz are not getting back to any sort of normal level, they're not at any level, as we just said, and the equity market and risk assets in general, which are very much trading on the idea that we're looking 3 months ahead and going, this is all on a path to de-escalation, everything's sort of fine and dandy. The commodity market is telling you a very, very different story. And there will be some out there saying, well, equities are forward looking, we don't need to worry about it. There will be some out there saying equities are too complacent, but that's why it takes two to make a market. You can trade this both ways.
Yeah, no, exactly that. So well, thankfully, we seem to be talking less and less about the Middle East, which is nice.
I was just going to say, one thing I have noticed, and again, this is kind of anecdotal, as a lot of things are with this sort of thing, where, you basically just pick up a general kind of vibe and mood of the market and of the news flow. One other thing that I have kind of noticed over the last, probably week or so, is that there's been less by way of conflicting news reports. So what I mean by that is, at the start of the conflict, we had, every man and his dog trying to get a scoop, trying to get a source's story, but they were very often at odds with each other. You'd have, Axios saying one thing, Reuters saying another, and Bloomberg saying something completely different. What seems to be happening now, though, is that actually all of the sources, all of the officials, all of the diplomats that are being quoted in these headlines are very much singing from the same hymn sheet, which again helps to suggest that actually, firstly, they're talking to each other, there's communications going on, but secondly, that we are again on that pathway towards potentially things de-escalating in more of a concrete manner.
Yeah, and one thing we can be sure of as well, stocks trading at all-time highs when things are going well, things are going better in the Middle East, that will be of note to Trump and Trump's camp.
Yes.
And, unless they're looking to buy the dip again, every chance we keep going up.
Also, just on the equity thing, it happens every time we hit a record high. We haven't been there since January, so I can repeat it again. A stock market hitting a record high is not bearish.
No,
it's not a sell signal in and of itself. One thing that you, me, and actually Westy, my boss, say all the time, record highs tend to bring along further record highs. It's actually a sign of momentum building to the upside. There are plenty of reasons out there to be bearish if you want them. We're not going to list them all off now. They're all very, very well known. But the market hitting an all-time high is not a case of, the S&P is trading north of 7,000 sell. No, that's not how this works at all.
No, exactly that. And again, just on while we're talking about friendly reminders, a reminder that the stock market is not a true reflection of the economy. It's not been
Well,
since
no.
it hasn't been since the global financial crisis. So anyone saying, "Oh, markets are wrong, markets are pricing in this or that," yeah, well, this is what markets do.
Yeah, that's kind of how markets work, guys.
Yeah, exactly that. What should we do now? Central banks.
Yes, central banks, and then there is another slightly nonsensical stock market story I want to cover very briefly before we go to the day ahead. So yeah, central banks, we were chatting the other day about how markets were continuing to price policy tightening potentially as soon as April from G10 central banks. We heard from, firstly, Bank of England Governor Andrew Bailey. He was giving an interview to the BBC overnight. The key lines from that interview were that the Bank of England are, and I quote, not going to rush to judgments as to the impact of the Middle East conflict on the UK economy, and that it is too early to form any strong judgments at this moment in time. The governor going on to say that a decision on rates is very, very difficult, but that the bank will wait for what he called meaningful data on the impact of the conflict before making any decisions. So that is not the language of a governor that is teeing the market up for a rate hike at the next meeting in 2 weeks' time. I would say it's not the language of a governor that actually really wants to deliver a rate hike. So further pushback from the old lady as to the idea that the BOE might have to raise rates. And we've also had some ECB sources stories over the last 24 hours or so as well. It's been a while since we got ECB sources between meetings. They usually come out bang after the meeting. But I think, again, that speaks to policymakers' desire to really manipulate the curve and get markets pricing out rate hikes. Officials cited by Reuters noted that policymakers are, quote, wary of an April rate hike because there is no evidence yet of second-round inflation effects. And then officials quoted by Bloomberg shortly after basically saying the same thing, noting that the ECB are leaning towards keeping interest rates unchanged this month, and that while tightening is still on the table, it will only be delivered if they see concrete evidence that policymakers need to act. So again, the ECB are not sounding keen on raising rates. The Bank of England pushing back on the idea of raising rates. Fed Chair Jay Powell saying a couple of weeks ago, we're in a good place to just wait and see what happens. It does not feel like central banks are panicking. It does not feel like they're going to tighten.
And like I've said many times, I've got pretty, arsy about, is that, if they did raise rates, it doesn't bring down energy prices anyway, which is where the inflation's coming from.
Exactly. And actually on that, he hasn't accepted yet. He liked the tweet and he hasn't actually said anything in reply, but I'm taking the like as a sort of virtual handshake because our good friend Dario Perkins was saying yesterday he thinks the next move from the Fed will be a rate hike. So I've offered him a lunch on that one, and I've had about 4 other people want to join in the bet on my side of things, which tells you where sentiment is at the moment.
Yeah, exactly. Well, at least especially when we talk about BOE pricing, which was pricing in like 4 hikes at one point. Well, the best part of 4 hikes.
Yeah.
I've not actually looked at what it is now, but I'm assuming that's come back markedly so.
If you talk amongst yourself for 2 seconds, don't tell any rude jokes.
Do you know what? I was just about to tell a joke.
God, no. So the swaps curve here in the UK has now got 33 basis points priced by December. As you say, that was up at like 95 basis points this time last month. So still a bit of room to go, but moving in the right direction.
Yeah, no, exactly that. So go on. I'm very interested now to hear more about. Let's move past thinking about Bailey and pushing back, and I now want to hear more about this nonsensical stock market stuff.
Yeah. So I've got to preface this by saying I promise you I'm not making this up.
Oh God!
And I promise you it was not the 1st of April. Let me just clarify that right away.
Oh, hang on. Is this about a certain shoe company?
It is, yeah.
Oh God!
So, and actually, do you know what's most annoying? They actually make really fucking comfortable shoes, or they used to. So there was a sneaker trainer manufacturer in the United States called Allbirds. Sadly, despite their shoes being very, very comfortable, they didn't seem to sell many of them. The company was struggling, so they got bought out for pennies effectively. They were worth about $4 billion at one point, but they got bought out for $50 million the other week, basically because they were worthless. However, they are now worth something because they have announced a corporate pivot. They are no longer going to be making sneakers. Instead, they are going to rebrand the company to, and I quote, New Bird AI, and will instead be renting out AI compute infrastructure and become a GPU as a service provider provider. Now, all of that to me sounds like complete and utter nonsense. Would you like to guess what happened to Allbirds stock yesterday?
It screamed higher. It flew higher, in fact.
It did fly higher. Very good. To the tune of 800%. Feels a little bit over exuberant, I think it's safe to say. The one thing that this did give me kind of flashbacks to, and I'm going to get the crypto people on my back by saying
you know
this,
what?
but
I'm so glad you're about to say this, because this is exactly the vibe I was getting. Go on.
yeah, so when, 2017, 2018, when you had Kodak becoming a Bitcoin company, you had the Long Island iced tea people suddenly pivoting towards the blockchain
Get
and
it
all
on
the rest of it.
blockchain.
Yeah, and it was, companies just adding blockchain to their name, basically in an effort to boost the stock price. And that, funnily enough, marks the top in terms of crypto at that time. Yeah, I'm not saying the same thing's happening all over again, but there's certainly some worrying parallels that you can draw between those two events, I think it's safe to say.
Yeah, what did they do? So Allbirds, they raised, was it $50 million or $500 million or something on a credit note or something?
Oh, it was 50, yeah.
50. And they basically just said, all we're doing is we're just going to be using that to buy GPU.
It's just bizarre.
Okay, great. Well, yeah, thanks for that.
Yeah, I mean,
Again,
it's something, isn't it?
Further evidence that the stock market is not the economy.
Yeah, I would say, though, it's one of those where I was talking with a few people about this yesterday when the news broke and they were up like 100% pre-market or whatever. You can't short that sort of thing. I mean, you won't actually get any stock on the borrow, but even if you could, it's just it's going to move so fast. You'll end up like the bloody Taylor Woodrow fella, because it's going to end up moving so fast against you. You've just almost got to watch it play out, even though it's utter nonsense.
Tell you what, I saw a good interview with Drunkenmiller yesterday, and he was talking about shorting like stock and stuff, and he said, I can't remember how many it was, but he shorted like a dozen stocks or whatever it was in 1999, all internet stocks, right? Lost 600 million or whatever it was. All of them went bankrupt during the dot-com bubble. And he kind of like emphasized the point that, shorting is a very dangerous game to play, because you can lose far more than 100% of your capital, and your timing's got to be perfect. And as he said, he's never had a down year, but he's never made money trading short. So yeah, certainly not one for me.
No, nor me. If you have a strategy that works and it involves selling things short, then fucking stick to it. Don't change what you're doing. But yeah, not really for me either, I've got to say.
Exactly the same here. Any more from you, Michael?
Yeah, just a few bits and bobs in terms of the day ahead. The data docket is relatively busy, but I don't think any of it matters too much, to be honest with you. From the Eurozone, we get the latest CPI figures this morning, but this is a final print, so it's not going to be revised from the flash estimate of 2.5% on an annual basis. We also get minutes from the March ECB meeting, but again, those are very, very stale at this moment in time, so won't tell us too much we don't already know. And then from the States, we get the weekly jobless claim stats, the Philadelphia Fed manufacturing survey, and also March industrial production data. Just on the jobless claims, do bear in mind that neither of those prints coincide with the April non-farm payroll survey week. So again, not too much by way of signal likely to be provided by that data. Besides that, we've got another busy day of central bank speakers, far too many for me to go through, but I will just flag that Fed Governor Stephen Myron is speaking, because I know he's Ryan's best friend. And earnings and earnings season continues today on Wall Street as well. Of course, we had the banks rounding things out yesterday. Morgan Stanley and Bank of America both delivering decent results and rallying on the back of that. Today's highlight is going to be Netflix, who report after the market closed. EPS expected 76 cents on revenue of $12 billion, and options imply a move of about 6.5% in Netflix stock in the after hours session. And of course, a continued focus on geopolitical shenanigans as well.
Exactly that. And again, as always with Netflix earnings, basically more people seem to care about subscriber numbers rather than the earnings numbers themselves. But again, as me and Michael Brown said this week, you could give us the earnings data before they come out, and we'd probably still lose money, because trading earnings seems like absolute Russian roulette. But there you go.
Yeah, and in a similar way to how selling things short isn't for us, I think trading earnings ain't for us either.
Exactly. I'm just happy to pick me winners, back them to go long. There you go, Michael. Pleasure as always, my dear friend. Listeners, thank you so much again. I'd like to think we put a smile on your face and maybe a bit of value into your day. Whatever you're doing, keep it tight, stay safe, and we will see you all tomorrow for the last day of the